I think the number to focus on really is effective rents, which is the rents after concessions that landlords are giving. And there is a significant gap, and that is how landlords are retaining, if you will, tenants, is by giving them concessions, so the effective rents are coming down. But the asking rents, generally speaking, have not come down or have not come down in any substantial way. And I, too, am a bit surprised by that.
So what do concessions look like? What are we talking about, given they're not going to show up in the headline number, I guess, as you're saying?
They would not show up in the headline number. So they would be things like free rent for a period of time. And if prior to the pandemic, you might get 1 month of free rent, now you might be getting 6 months of free rent. And obviously, as new leases are being signed, particularly leases that are subleases, right, taking sublease space, there the asking rents are coming down.
They are. So what are your expectations? I mean, there's so many different things to try to understand in terms of, and not know in terms of what's going to happen with the office market. But given the rise of hybrid work at the very least, the fact that so many workforces may be in 50, 60, perhaps 70% of the time, is your expectation there's going to be a lot of capacity out there for a long period of time?
I think it's going to take a while for things to work through the system, and that's not uncommon when you have a slowdown in demand for office. So while there was a different reason in 2008, 2009, we saw a slowdown, and it took a while for the excess inventory to be worked through. But once the economy starts growing again or continues to grow and grows more or gets bigger, that's usually what happens after each cycle, then that space starts to be taken up. So I think it's going to take a while. Yes, there's going to be hybrid work. We don't know exactly what that's going to look like. Generally, you hear companies talking about 3 days in the office, 2 days at home, but the space is still required. Space is being used differently than historically. So it's not about cubes and offices, but the spaces are more creative. You take up more space with couches and desks and things that millennials like to use. So square footage is getting used in a different way. We may see, some percentage reduction in demand in the short to medium term, and then I think it'll normalize and we'll be on our way. But it could take a few years.
Yeah, arguably more space per person could work in favor of building owners, I suppose, over time. Turning to retail, Gil, you mentioned that in 2021, more physical stores are being opened than closed. I presume that's because so many were closed in 2020. But what areas are growing? And I see things like the mall real estate investment trust stocks flying. It seems almost as if people are feeling like this is going to be a durable comeback for physical retail.
Yes, so you're exactly right. We're working off a low base, right? And so there are more stores opening than closing, but 2020 was pretty severe on the other side of that coin. I do think that retail is in better shape than most people think, certainly in better shape today than it was 15 months ago. We're finding that the buzzword in that space is omni-channel. So people that buy online, or consumers more and more buy online as well as in-store. And particularly, they return to in-store and then maybe make an impulse purchase. So that's sort of what you're seeing going on in retail. Certain categories, grocery stores, do-it-yourself stores, beauty stores, essential stores are doing quite well or starting to do quite well. I think the stat is that we're only down about 10% in terms of foot traffic versus 2019 at this point. So definitely recovering in real estate, in retail, and learning how to do retail, if you will, in the context of the virus.